Thank you for joining us today. My name is Janie Sacco, and I'm the Outreach and Marketing Specialist with the Small Business Administration Seattle District Office. We're going to have a presentation today on funding your business for BizFair. What I'd like you to know is that the Small Business Administration is a federal agency which really works to help you as a small business either start, grow, expand, or recover from the COVID situation or any other disaster that befalls your business. We do that through three areas of focus. The three areas are equitable access to capital, increasing contracting opportunities, and providing technical assistance in the community. With our equitable access to capital, you can borrow money from either a bank or a credit union or a nonprofit revolving loan fund, which participates in the SBA programs. And we have more than 100 institutions in our market area that can help you. And then on the contracting side, we have business opportunity specialists in our district, which help you potentially contract with the federal government to increase your revenue stream. And then we also have, to support both of these functions, the technical assistance providers that are in your community that will provide assistance in the form of education, classes, and one-on-one counseling or mentoring to help you develop your business plan and focus on areas where you're having difficulty to help your business grow. So what I want you to know is you are not alone. The Small Business Administration and all of its support team out in the community is here to help you as a small business owner. We're going to talk about the SBA loan programs and resources as we go through the rest of this presentation. Just a really quick overview. Our financing programs include the 7A Loan Guarantee Program. And as I mentioned earlier, we have over 100 participating lenders that helped us get funds out to you for a record over $1 billion in fiscal year 2021. That is the first time the Seattle District Office has reached over $1 billion in funding to the small business community. What a remarkable achievement for all of us to help stimulate growth and help you as a small business community meet your needs. We also have the 504 program. The 504 loan program is supported by 3 community development companies that are in our area, and they provide basically processing agent services on behalf of the SBA. So they are Ameritrust CDC, Evergreen Business Capital, and Northwest Business Development Association, and they are located throughout our state. We also have the microloan program. The microloan program is limited to loans of $50,000 or less. And then we have the Community Advantage program. The Community Advantage program runs through September 30th, 2023, and it provides funding of up to $350,000 for businesses that are in rural market areas and underserved communities. The other programs that we have to support small businesses are the 8A Business Opportunity Program. This program is specifically for disadvantaged business enterprises, woman-owned businesses, and veteran-owned businesses. They are all self-certified programs, which means that you complete applications for the certification process. And we have 4 business opportunity specialists in our district who work with you for a 9-year period of time to obtain federal contracts. It's a great program to increase your revenue stream and develop expertise about how to work with the federal government for contracting purposes. Then we have the Surety Bond Program. This program is specifically for contractors who need bonds. And this program enables small businesses to qualify for a larger bond. what that means for you as a small business owner involved in this is that you can bid on larger projects and grow your business at a faster pace. And then we have the innovation programs. The Small Business Investment Companies program is one where private companies work with the federal government on this program to enable you to apply for capital injection into your business. The Small Business Innovation Research Program and the Small Business Technology Transfer Program enable you to apply for grants that are led by various federal agencies to do innovation, research, and development in order to solve a problem that the federal government has in relation to either equipment, a hard product, or technology. And then the other program we have is the Growth Accelerator Fund Competition, and that enables incubators to apply for funding to expand and grow their incubation program. Now we're going to switch back to the actual funding that the SBA helps the financial institutions do. It is a 7A guaranteed loan program. And really, it truly is our flagship financing program. The majority of the funding that is promoted by the SBA really works with the 7A loan guarantee program. What you need to do is take a look at the commercial lenders and credit unions that are in your market area, check their websites, and see if they do SBA loan funding. And it's very easy to do. We have many throughout the community and a very broad reach throughout our district. The loan guarantee actually offers up to a 90% guarantee to the lending institution. And this mitigates their risk because their exposure for default or failure on the loan is limited by the amount not guaranteed under this program. So we'll talk about that in a bit more detail here in a few minutes. But essentially what happens by extending that guarantee to mitigate the risk to the lender, it really promotes financing that the lenders would not otherwise be able to do under their conventional programs. So let's talk about some common situations where a lender would be able to utilize the 7A loan guarantee program for your business. If you're a new business, and that's defined as you haven't opened your doors or you're up to 2 years in business, it's very difficult a lot of times to get financing for you because you don't have a strong earnings history. So this program enables you to qualify for funding the financial institutions may not otherwise do. The lack of earnings history is a little bit different twist on that. What happens here is if you have been in business for more than 2 years, but you've had some up and down in your operating profit and your cash flow has fluctuated, and you don't have consistent demonstrated ability to generate enough cash to repay a loan, then this program helps mitigate that risk. And if you have 2 out of 3 years in your current year that you have an ability to repay the loan, but you don't quite have 3 fiscal years, this is the program for you. Many of our loans are extended by you not having enough collateral on a liquidation value basis. I'm going to talk about that in a little bit later as we go through some 5 C's. But basically, if you have business assets, those business assets will be reevaluated based on a liquidation value. And when the liquidation value of the total collateral that you're pledging on behalf of the business is less than your loan amount, you are deemed to have insufficient collateral. This is the most common reason financial institutions use the 7A loan guarantee program to help a business get money. The longer term than conventionally available really means that we're enabling financial institutions to extend the maturity on the loan. When the maturity is extended, that means your monthly payment is smaller, and it enables you to borrow more with less cash flow. Limited capital, all of our programs at a minimum allow you to inject at least 10% of the total capital need for your funding purpose. And essentially, what that means, if you need to have $100,000, you can inject as little as $10,000 and borrow up to 90. Again, we're going to talk about the capital a little bit here, but I just want you to have that nucleus of information. And then sometimes it's industry considerations. Some industries are deemed a little bit higher risk than others by financial institutions. And when that's the case, they may be able to still do a loan to your company in conjunction with an SBA guarantee. And then for those of you who are exporters, we have outstanding export guarantee programs to help you expand your business as well and penetrate new markets so you can grow your business too. So let's talk a little bit about the nuts and bolts of the 7A loan guarantee program. The maximum loan amount is $5 million. There is no minimum, so it could be as little as $100. Isn't that great for you? If you need one little thing, you can qualify. In our fiscal year 2021, the average loan size was over $700,000. But prior to that, pre-COVID, the average loan size was in the $400,000 range. So we're not talking huge loans, but they are important for you. The maximum guarantee is $4.5 million. And this varies a little bit, but the $4.5 million is for the export programs. Our other standard programs cap out at a maximum guarantee of $3,750,000. We do have maximum interest rates that the lenders have to comply with. So the way that works is we have a base rate, and the base rate may be Wall Street Journal Prime or a calculated SBA peg rate or an SBA fixed rate base. And then we allow the lenders to extend a spread over the base rate. And that base rate spread can range from as low as 3% to a maximum of 6.5%. And it really depends upon the loan amount. And an example of this is Wall Street Journal Prime right now is 5.5%. If they added a 3% spread, your interest rate at the beginning of the loan would be 8.5%. Again, the base rate plus the maximums are that you could have a lower interest rate spread than the 3 or 6.5%, depending on your loan amount. The great thing about this program is the maturities can extend up to 25 years. When you're talking about a working capital loan or a business acquisition or debt refinance, small equipment, your maximum maturity is limited to 10 years. For equipment that has a useful life beyond 10 years, you could have a 15-year maturity. And when at least 51% or more of the project involves commercial real estate that is owner occupied, your maturity can extend out to 25 years. The SBA does charge a guarantee fee to the financial institutions, and they pass that through to you as part of the project costs. But again, you may be funding only a minimum of 10% of that. Again, the minimum down payment is at the discretion of the lender. Let's talk about the uses of the SBA loan proceeds. Well, we have a line of credit product, actually several of those. And then we have several types of term loans as relative to use. So for the lines of credit, you can use money for operating expenses, funding your accounts receivable collection period, or funding specific contracts, and or any other short-term use of money. Then we have term loans. They can be used for the exact same purpose, funding working capital, funding inventory purchase, funding accounts payable, whatever your cash needs are for operating expenses in the business, the term loans can be used for those things as well. Then term loans can also be used to acquire equipment, do tenant improvements, purchase fixtures and install them, or purchase existing buildings that you have to have owner occupied. And owner occupied means that your operating company occupies at least 51% of the space. And you can also do ground up construction projects with the 7A program. So again, if you're going to occupy the space by at least 51%, then you can do a land purchase and build your building to your specifications. The other good thing about the term loans is you can use them to refinance existing debt, and you can also use them to fund a change of ownership, so you can buy a business. Now, for all of these, there are specific requirements that you have to comply with. Your financial institution will help make you determination if you're qualified for each one of these loans. And I do want you to know that before COVID, approximately 25% of all the loans that were done actually went to startup businesses. And remember, startup is defined as you're not in operation at all the way up to being in operation for 2 years. This slide just gives you an idea by NAICS code, the North American Industry System, which industries are heavily utilized by lenders to do SBA funding. You're looking at restaurants, gas stations with convenience stores, the hospitality industry, the fitness industry, and professional practices across the board. Could be medical, accounting, any type of professional office, attorneys. So it's a little bit of a mix over the years, but these tend to be in the top 10 of the industries that are utilized by the SBA products. I just want to show you the top 10 lenders for fiscal year 2021 for our district. But what I want you to know is that if the institution has done one SBA loan, then they know how to do them. So don't count them out. Just go ahead and work with the lender that you're most comfortable with, that can provide you with your needs and help you meet them. As far as loan eligibility goes, there is a size standard that businesses have to comply with. For manufacturers, wholesalers, typically the size standard revolves around your number of employees. And for retailers, contractors, service-based businesses, your size standard revolves around average annual revenue. And I put the link in for the size standards. What you need to do is then look at your industry based on your NAICS code and make a determination of what your size standard is at a maximum. Okay. Now, the other eligibility that's just a general statement here is that your type of business must be a for-profit entity. There are many types of businesses. Actually, there are 20 categories of businesses that are not eligible for an SBA guarantee. And I don't want to go into all of those, but for the most part, businesses that are for-profit tend to be eligible. A few examples of ineligible businesses are nonprofits, passive income types of businesses, and ones that are of a sexual prurient nature. So these types of businesses are not eligible. But again, there are 20 types. Your lender will work with you to make a determination if your business is eligible. The use of proceeds, we talked about that a little bit already. Many uses, but the ones that are not eligible are just ones that enrich only the owners of the business. So the proceeds may not be used specifically to fund the owner's salary or refinance owner-produced debt, okay? So again, your lender will walk you through those and make sure that you're in compliance. In regard to character, what we have the lenders review is your personal credit history and your criminal history. And there's a form that I'm going to show you a little bit later that you will have to go through and address. If you have had a bankruptcy or some type of criminal history, that doesn't mean you're ineligible. Just means that your lender has to do a review and make sure that you meet the criteria at this point in time. And not all loans are eligible for an SBA guarantee. Financial institutions need to, in their presentation to the SBA, demonstrate that credit was not available elsewhere. And essentially, that simply means they were not able to do the loan under their normal underwriting criteria for one reason or another, and they have to list those reasons. So let's talk about the guarantee loan process. You as a business owner apply for a loan to a lender. The lender evaluates how they would do your financing, and they may do a direct loan or conventional loan and not involve the SBA guarantee process at all. But if they can't, and they make a determination that you are eligible for a loan under the SBA program, then the lender works with you and applies to the SBA for a guarantee on your behalf. Most of the time that is done electronically. And then once the SBA does do a guarantee, the lender closes and services the loan. So you work with the financial institution to sign all your loan documents. And if you have any changes or things that happen over the life of your loan, you work with the lender to help you get through those rough patches. In the event the business is unable to repay the SBA guaranteed loan, then the lender applies for an exercise of the guarantee, and the SBA pays the guarantee based on the outstanding balance and the percentage of the guarantee on the loan to the lender in the event of a default. Usually there's no interaction between the SBA and the borrower other than when you call in and do inquiries. But again, when you're involved in that actual borrowing process, you're really working with your lender. So I wanted to just briefly show you the number of programs that we have. Again, we have 7A loans. All of the criteria that I've talked to you about, it falls under those, but we have different programs for different loan sizes and processes that the lenders can take advantage of. For veterans, we have the SBA Veterans Advantage. That program goes up to a maximum of $500,000, and there is no SBA guarantee fee assessed on that program. Then you can see our Capline products for working capital, contracts, and then if you have seasonality in your business, you may need to have this program short term. And then for the builders out there, we have a builder line of credit program specifically tailored for you. And then the Community Advantage program, which I briefly went over. It does say that expires 9/30/2022, but it has been updated to an expiration date of September 30th, 2023. And then we have our international trade products for our exporters. We have lines of credit, we have term loans, all to meet your needs. And that's a great thing to help you expand your business. And then we have the 504 loans, and I'm going to touch on those in a few minutes. We also have the micro lenders here, and I'm going to go over those individual lenders that we have in our community to help you with the smaller dollar transactions. So now let's talk about the SBA 504 loan program. This program is specifically for the acquisition or refinance of fixed assets. So what type of fixed assets are we talking about? We're talking about equipment. We're talking about owner-occupied commercial real estate. We're talking about purchasing land and constructing an owner-occupied commercial building. So you've heard me say those words before on the 7A program. There is overlap, but this program is specifically designed to finance only the hard fixed asset portion of your needs. And it's a great program because it offers you the opportunity to have more fixed rate pricing on the transaction. Again, you can also refinance debt that is on equipment and owner-occupied commercial real estate. So I'm going to stop here for just a second and just give you a little bit more information. If you're going to purchase an owner-occupied commercial real estate transaction under this program, your operating company, your business that's generating the revenue, needs to be a 51% or more occupant of the commercial real estate that you're acquiring. If you're going to do ground up construction, purchase land and then build a building, you need to occupy with your operating company at least 60% of the space with the intent of occupying more over time. Okay. When you're talking about the refinance, again, there are very specific rules that you need to comply with. Again, your lender and the community development companies I mentioned before, Meritrust, Evergreen, and Northwest Business Development Association. They work with you and your lender to help you get through this program. So how does the financing look on this one? Well, it's a little bit unique again, because the lender does a direct loan for a minimum of 50% of the total project. The SBA, through the Community Development Company processing agent, finances either 30 to 40% of the total project. And then your capital injection requirement is either 10 to 20% of the total project. So how do you define or know how much you as borrower have to inject? Well, the minimum is 10% for a business that has been in operation for more than 2 years and has a general purpose building that they are including as part of their project. However, if your business has been in operation for less than 2 years, then you have another 5% that you need to put in. So your capital injection on a general purpose building would be 15%. There is another 5% requirement for special use buildings. So if you've been in operation for more than 2 years and you're doing a special purpose building, then your capital injection requirement would be 15%. And then if you're a startup and you have a special building, special use building that you're working on, your capital injection would be 20%. And that's why the range for the SBA financing is from 30 to 40%. So what do lenders look for when they are evaluating your request? They are looking at the 5 C's of credit: capacity, cash flow, your capital contribution, the collateral that you're pledging, and your character assessment. We're going to talk about each one of those now. So first of all, on capacity, that's all about you as the business owner. And it's all about you and any other business owners that you have in the operation, especially those that own 20% or more of the business. We're looking at your management ability overall. What's your work history? What's your education relative to the business operation that you're trying to do? What classes have you taken? What training have you done? What certification is required? And do you have that? So all of these things are usually embedded in your resume. But when you're talking about a resume for this purpose, what I want you to think about is don't just put down where you worked, what your position title was, how long you worked there, but talk about the skills that you generated while you were working for the company. And more importantly, how you, with your skill base, were able to enhance the operations of who you worked for and make it more successful. That talks about your skill base and your ability to operate your business. You also may want to include information regarding your management team if you have one. your staff, your employees, how they contribute to your operation, advisors that you're bringing in to help support your knowledge base. If you have key people that you're working with, that you're contracting with, such as an attorney or a CPA or bookkeeper, talk about them too. What we want to see is how your operation is going to come together so that you can be successful. So if you have a deficiency in any part of the management aspects of your operation, you want to talk about those and how you're going to supplement those skills with people outside your organization. In regard to cash flow, I'm going to talk about this in two different venues here. One is if you're a startup business. Again, less than 2 years in operation, or you haven't opened your doors at all. What you want to do is make sure that you have demonstrated an ability to repay this loan. And you do that through a cash flow projection. So what you do for the first year of operations that you're projecting for is you provide the information on a monthly basis. That's your revenue, your expenses, cost of goods sold. And then the second year, you need to also do that, but you can do it on an annualized basis if you want to, or monthly, whatever range you want to do that in. The most important aspect of this, though, is you need to provide the assumptions about how you're thinking about those numbers and how you're putting them together. The 6C people talk about is your customer base. You really need to have a good handle on who your customers are when you're describing the assumptions here for your revenues. And you support that through Census Bureau information, Chamber of Commerce information, any industry information that you can help support your client base and make sure that you really can generate revenue that you're projecting. I kind of throw in the 6th or 7th C here too, and that's your competition. You always want to talk about your competition to make sure you understand who your competitors really are. And we talk about that on a primary, secondary, and tertiary basis. That simply means that you may have a direct competitor, you may have some other competitors that kind of do the same thing that you do, and then you may have other competitors out there that offer some similar services, but not everything that you do. So you want to touch on all three levels of that competition, just so you can evidence that you really have an ability to penetrate the market and achieve your numbers. For existing businesses, what the financial institutions are doing is they are looking at your historical cash flow based on your profit and loss statements or your income statements, depending on who's prepared them. The name can change on that income statement or profit and loss statement. So what they're looking for is your operating profit and the cash flow, add backs that they do for things like interest expense, depreciation expense, amortization expense, and any other changes, positively or negatively, that will occur as a result of you getting this loan. Okay, so when you're looking at purchasing a business, then we look at, as a financial institution, the historical information from the seller on their financial statements, and then the lenders will adapt your cash flow to analyze any changes you're going to make as a result of your new ownership of the business. And again, the debt service here, when you're buying a business, can include a seller who helps finance part of the purchase price. So when you're looking at this historically, again, you're looking at up to 3 years of tax returns. If you don't have 3 years of tax returns, that's okay. Just provide what you have. You may be asked to do a company prepared balance sheet and income statement for the most recent fiscal year that's passed and your current period year to date with a balance sheet and income statement that's not more than 60 days old. Moving on to your contribution. This is all about that capital injection and the need for you to inject at least a minimum of 10%. Now, financial institutions can have a say on this. and they will let you know how much they want you to inject into the business. And for startups, that injection range may be 10 to 35%. So again, that's at the discretion of the lender, but the minimum is 10%. So where can this money come from? It can come from your personal savings. You can borrow on a line of credit that you have on your home. The money can come from borrowing from family member or friends, or gifts from those same family and friends. And the seller, as I indicated earlier, or other investors can provide debt financing to you, or you can split the ownership of your business up and have other investors come in as partial owners and help you do your equity injection so that you can obtain your financing. We talked about the collateral a little bit earlier. And again, SBA loans are required to be secured to the fullest extent possible. And as I mentioned earlier, lenders discount the collateral value based on a liquidation basis. And their liquidation rates can change based on their own internal requirements. But I want you to know, a lack of collateral does not mean you're not eligible for an SBA guaranteed loan. What your lenders will do is ask you to pledge an assignment of a life insurance policy for at least the amount of the deficiency, or for the full loan amount. If this is the only source of income for you that's coming out of this business, they may also have you pledge an assignment of a disability policy, and that disability policy covers your monthly payments for your personal needs as well as the business. And then again, the SBA guaranteed loans are generally more flexible in situations where collateral is limited. So if you don't have collateral, please still apply, and the lenders will help you through that process. Last but not least, we have the character or credit history issue. What the lenders are going to do for each 20% or more owner is they're going to pull up personal credit history on you. They're looking at how well you repay your personal debt. If you've had a bankruptcy or bad credit in your past, that's not necessarily an issue that is going to eliminate you from being able to get an SBA guarantee, but they will evaluate that and make sure that you still have an ability to repay this loan. And then, as I mentioned earlier, if you do have a criminal history, there's a process that the lenders will have you go through to provide more information regarding any history that you have in the past. And one of the documents that they have you do as part of this application process is the SBA Form 1919. And that has you answer questions in regard to all of the things related to you as an individual business owner. Okay, so each 20% or more owner has to complete a 1919 form. So that's a summary of what we're looking for when you're talking about commercial banks and credit unions in our community that support your needs through the SBA programs. But there are other resources in our district. We're going to talk about those. We have a whole host of micro lenders. Again, the micro lenders in our community are able to do loans up to a maximum of $50,000. Now, some of these lenders will do a smaller cap on their loan than the $50,000, but the program itself does go up to a maximum of $50,000. So we have Business Impact Northwest, Ventures, Mercy Corps Northwest, SNAP, New Roots, and the RCDR. What's interesting about all of these is that they provide coverage over different parts of our district. And our district runs for the majority of the state of Washington. And then we also cover Northern Idaho. So these 6 organizations may cover all of that market area or a portion of that market area, depending upon their needs and their requirements for their coverage. So what I want you to understand is take a look at their websites, see what market areas they cover, see what their maximum dollar amounts are and what their programs are, and then you will select the one that may meet your needs the best. And that's part of what we do for the community, especially those businesses that need those smaller dollar loans and may struggle to get them from our financial institutions serving our community. The other programs that we have are the Community Advantage Program. We have 2 Community Advantage Program lenders serving our district. They are Craft 3 and Evergreen Business Capital. They participate in the Community Advantage Program with a mission of providing funding of up to $350,000 to businesses that are underserved and or are in rural communities. This is a very important need for our small businesses, especially when you're in a rural area and you have limited lending opportunities. So it's a great program for you. We also have the lender match, and this is a much broader focus for you. You go on to the sba.gov/lender match site. You put in a little bit of information about your business needs and how to contact you. And then when you hit send, this need request broadcasts out to all lenders nationally who are participating in this program. And they generally get back to you within 24 to 48 hours if they have an interest in helping fund your business need. It's a great program and it provides you much broader expanse of lenders that you would not otherwise be able to access. And then we have the U.S. Department of Agriculture. They're our sister agency at the federal level, and they provide funding into rural communities, typically as defined by population basis of less than 50,000. They have an array of outstanding programs, and they provide funding where the SBA may not. So it's a great program, and you should look at their website to see if your needs can be met by their agency as well. Moving along to the additional resources in our community, we have a whole host of technical assistance providers to help answer your questions, give you advice, mentor you, and help you in your business be better and understand how to develop it more efficiently, and also help you find financial institutions to do funding if that's part of your need. The first one we're going to talk about is the Service Corps of Retired Executives, SCORE. They have mentors across the United States, but we have 8 chapters in the state of Washington to help you with your business needs. You can reach them by going to www.score.org and you can put in your zip code. In the Seattle market area, their website is www.seattle.score.org, and their phone number is 206-553-7320. They're there to help you, and they have great training classes and a whole host of online workshops for you to learn how to operate your business better. Next, we have the Small Business Development Centers. There are more than 27 offices in our state now. I believe there's 29, and they're growing in their coverage area. They also provide free business consulting to help you grow and expand your business. They also provide low-cost training on topics that come up from time to time and provide focused information. Now, what's the difference between SCORE and the Small Business Development Centers? Well, typically, SCORE works with businesses that are in operation up to 2 years. And then the Small Business Development Centers work with businesses that are in operation for more than 2 years. They do have a little bit of overlap. And when you're looking at the locations of the closest mentors for SCORE and business advisors for the small business development centers, you can overlap and take a look at which one is closest to you and which one best meets your needs. So great resources in the community. And then we have a little bit more focused technical assistance providers in the form of women's business centers. They typically work with women-owned businesses. However, they will help male-owned businesses too, if needed in their community. We have 3 women's business centers in our state. One is in Spokane, the other is in Lacey, and then the final one is in Seattle. And they are here to help provide comprehensive training and counseling for you. And the really nice thing is that they may be able to help you if you do not have English as your first language. And that's true of the Small Business Development Center staff as well. They have coverage in a few different languages. So again, what we're trying to do here is just make sure that you have good technical assistance, you get questions answered, you're putting your best business plan together with all the information that you need to then approach financial institutions if that's your need, or just get advice on how to help your business be more efficient. And then for our veterans, we have the Veterans Business Outreach Centers. We have one in Seattle, and they do a tremendous amount of training and counseling and technical assistance for veteran-owned businesses. This is crucial to helping you expand and grow your business. And if you're a military spouse, you can use the Veterans Business Outreach Centers as well. We just added a new program. It is called the Community Navigator Program. And this program is designed to provide technical assistance to disadvantaged groups of business owners. And we're talking about veterans, women, communities of color, rural communities. And we have 2 in our state, the Urban League of Metropolitan Seattle and the Tala Fund, which is in Pacific Beach on the coast. So those are our 5 technical assistance providers. And one of them can help meet your needs and answer your questions. So some final thoughts. Really, the biggest one that I want to share is be prepared. Have a solid business plan or loan proposal together. Understand what's in that package that you're presenting. Be ready to answer questions. Be confident. If you do a good job putting that information together, you're going to go in there with confidence, strong ability to answer questions. Try to think of what the lender might want to know to anticipate their questions. But if you don't know and they're asking you a question, don't worry. They'll let you have a little bit of time to get through that and get some of their questions addressed if they're not in that business plan or loan proposal. So documentation that you need to bring would be for each 20% or more owner, you want to prepare your personal financial statement and business tax returns up to 3 years. If you haven't filed 3 years of returns, that's okay. Bring what you have that's most recent. You want to bring in your business tax returns if you're an existing business owner. Again, you want to do a business financial statement, company prepared, and for the most recent fiscal year and the current year, in this case, 2022, we're in September. So you probably want to have a balance sheet and income statement through at least June or the end of July for a lender to take a look at. You want to have that resume. You want to thoroughly talk about all the costs that you're going to have that are requiring this need to borrow. You want to have an executive summary that really talks about the overall view of your business. And then you want to have that business plan to help you. So We're here to help you answer any questions, get you to the financial institutions, help problem solve on the front end for you. And we have 2 offices in our district. We have the Spokane branch office serving the east side of the state. We have the Seattle district office serving the west side of the state. You can reach us by sending an email to info SDO, which is info Seattle district office at sba.gov. You can call us at our numbers listed. You can connect with us by going to sba.gov/Washington, sign up for our email updates, keep current on all the things that are happening with the SBA in relation to helping serve you as a small business owner. Follow us on Twitter, but reach out. We're here to support you. Remember, you're not alone. If you have any questions, you can reach me at janie.sacco@sba.gov and my phone number 206-300-3863. Thank you for attending this workshop, and I wish you much success in the future with your business. Thank you.